Welcome to Geared for Growth. I'm your host, Mike Mortlock from MCG Quantity Surveyors, and today I'm joined by Lachlan O'Connell, a buyer's agent on the ground in regional Victoria, where we're starting to see some serious momentum building. We unpack what's really happening in markets like Ballarat, where sub 500k opportunities have quickly shifted into the 600k range. Competition is heating up and local owner-occupier demand is driving much of the growth. This episode is a good reminder that markets move fast and, more importantly, that there are markets within markets. Not every suburb and certainly not every pocket behaves the same. We also get into how investor behaviour is changing, where the risks are with oversupply, and why some buyers are still finding opportunity while others sit on the sidelines. If you're trying to make sense of where value sits right now and how to position yourself for the next phase of the cycle, this is a really practical conversation. Let's get into it. Lachlan O'Connell, thanks for joining me on Geared for Growth.
Thanks for having me on, Mike.
I've been trying to get you for a little while, actually, but it's nice to finally have you cornered, especially because you're based down south in Victoria and there's been a lot of eyeballs on that particular market. There's a lot of investors that I think are chasing where the green pastures are. We've sort of seen Perth do its thing. We've seen Darwin do its thing. A lot of people looking into places like Hobart, but certainly the majority of the inquiry that we're seeing is in Victoria and some of those regions. What are you sort of seeing on the ground right now?
Yeah, absolutely, Mike. I think there was a big shift sort of in the middle part of last year, mid-2025. It got momentum really, really quickly. At the start of 2025, you could still buy really good established properties for under that $500,000 mark, talking three-bedroom houses on 500-600 square metres in good established suburbs in some major regional markets, whereas towards the back end of the year, but those properties just simply didn't exist now anymore. So, we're getting weekly phone calls, people still wanting that $500,000 property on, decent land size and, good locations, whereas that conversation's changed drastically in the last 6 months. So, those what were $500,000 properties are now moved up into that 600 bracket and even north of that for some of the stuff we were buying at the start of 2025. So it's quite crazy how quickly markets can move, and that's where, being on top of it and working within it in a weekly and daily basis, that's where we get a really strong advantage and seeing what's happening in real time.
Sounds like you get a lot of those unicorn questions. I want sub 500, 5.5% yield with 20% growth in the first 12 months. I mean, what's wrong, mate? Why can't you get them together?
Well, it is still achievable, but it just takes a little bit of I suppose, difference in asset selection. So instead of a freestanding house, you might be a three-bedroom unit that's still on, decent land component with a better yield in potentially a slightly better location. If you've still got those lower end budgets, where if you can stretch a little bit further into the 6 and 650s, there's some great properties for that value.
Interesting. Yeah. I want to come back to that, but just starting with Victoria as a whole, the market has really suffered. You're kind of saying you're seeing heat and have been seeing heat since 2025, but with the budget in the state that it is, the post-COVID repair, land tax levies, obviously it's not performed very well in the last 5 or so years. What are your sort of expectations and how do sort of the interstate investors view it when they're chatting to you in your sort of discovery calls?
Yeah, sure. So it's almost like every pocket of Australia gets its turn for some uplift. So back at COVID, in that sort of 2020 period, that's where we saw a really strong shift in regional Victoria. So it's very similar to that sort of time frame, as far as what we're seeing at open homes and people going in with unconditional offers on that first open. So, first home buyers that have got mum and dad with them that are happy to pay whatever they need to just to get the property. So sometimes it can be quite reckless. I've, gone through properties and the agents told me that there was an unconditional offer on it. And, I was sort of just mind blown by the state of the property and, the issues that were quite obvious from that inspection. But it's got the very similar traits to the market back in that period. So it's dozens and dozens of groups at the open for inspections. Obviously we had a quieter patch through Victoria in 23, 24. That's when a lot of, as you mentioned earlier, Perth and regional Queensland had a really strong run. And now it's got to the point that investors with a 500 or 600K budget just simply can't get into those markets now. So, a lot of investors are seeing strong value in Victoria and see a lot of these regional markets as undervalued, which they, sort of are compared to the rest of the country. So that's where I'm seeing, really strong results over the last 12 months and haven't seen any signs of slowing down. So what are we today? We're mid-April today. So, yeah, I went to 5 or 6 inspections on Saturday in Ballarat here, and there was well over 10 groups at every inspection, and they were at different price points. So there was a 400K renovator. I think that had about 20 or 30 groups. A 500K renovator was similar. And then there was some in that 700 range that had about 10 or 12 groups through. So it was a real mix of local home buyers as well as investors at those opens, but probably more so dominated by the local home buyer demand, which is very promising, particularly in the suburbs that we are buying in Ballarat. You can get stuck quite easily because there's some suburbs have got 3 or 4 markets within that particular suburb, because of the area of them and the complexities and the uniqueness of some of these suburbs.
It's very interesting. It was going to be actually my next question. Is the majority of that demand driven by investors, but you're saying that it's homeowners, first home buyers, upgraders, which kind of says to me that it's a less speculative market where maybe that's a different sort of thing from what we've seen in Perth and maybe even to a greater extent in Darwin. You think that's a healthier metric to have a good split of investors and owner occupiers?
Yeah, absolutely. And it underpins the long-term capital growth. So a good example in Ballarat would be Wendouree and Ballarat North. So Ballarat North's a lot more tightly held and there's far less turnover of sales. So Wendouree's seen over 22% growth in the last 12 months. And wow. Wendouree is one of these suburbs that I'm talking's got markets within that suburb. So, there's a triangle sort of in the back corner of Wendouree West, where you absolutely wouldn't buy. And then, south of Grevillea Road, there's some really good pockets. And then south of Norman Street, again, is the real sweet spot of where you want to get close to the lake, close to the CBD. So that's just one example of one suburb. But a lot of the interstate investors are getting unstuck buying in the pockets where you could buy a house for 350, 400. And now those houses are selling for 500, which we'd never consider investing out there. But that's artificially pushing that median price up significantly when, houses in the better pockets are selling for 650, even up to 700. In one case, there was one that sold in the 900s. That was on a large land plot. But it's, local people understand the value in the better pockets when they can walk to Lake Wendouree, walk to Grammar, walk to the shopping centres. So that's where it's we're seeing some skewed results in some suburbs. And then Sebastopol's another one to mention where similar, most of the growth there is coming from interstate investors that, they can see it stacking up on paper in the short term. And yes, they might get 15, 20% over an 18-month period. But once that's artificial demand has moved on, there's going to be less owner occupiers that are going to want to consume that stock as opposed to the better pockets of, say, Wendouree, Ballarat North, Black Hill, Ballarat East, and some of these sort of more established inner sort of ring suburbs.
It's an interesting observation where even buying in what you would call the wrong places, you can still potentially do 10 or 15%. It's sort of, there's a parallel between almost like it's property's version of day trading, right? Where people are, trying to ride these momentum waves and I don't know, potentially sell at the top. There's an argument to say 10 or 15% is maybe not enough when you consider the capital gains and that sort of thing. Are you sort of observing a different type of investor that you saw, in and around COVID?
Yeah, absolutely. And I think the land tax and all the additional rental compliance and other, challenges that Victorian investors had, that really did scare a lot of people off in that sort of 21 to 24 time frame, 2021 to 2024, where most people were focusing interstate. But I think people are a lot more educated now. Say, for instance, property in far north Queensland, the rates in insurance are almost double what one in Victoria would be. So that, coming back, you've got less rates, less insurance. Yes, you do have some land tax, but it almost sort of mitigates that out, just purely because the holding costs are a bit different. So, yes, the yields are better in some of those regional Queensland and Perth markets and things like that. But, some of these really good pockets in, say Ballarat and Geelong that we're buying in, really commutable to Melbourne, which is obviously our second largest city and soon to be largest city. It's with the people having work flexibility, it's a very viable option, and probably a third of our clientele are people relocating from Melbourne to Ballarat here just to have a more affordable house, really good schooling, and they can still go to Melbourne 2 or 3 days a week if they need for work.
It's very interesting to hear you say, places have done 20+%, but then you look at Melbourne in the sort of totality results and it's just not showing any signs of life. It just goes to show, obviously, there's markets within markets. And to that point, I didn't even realise there was a lake in Ballarat. I don't think I've been there since maybe gold panning as a 6-year-old enthusiastic kid wanting to strike it rich. But you're quoting particular streets. It's not just because you are a buyer's agent with boots on the ground. You've actually got local knowledge as a former resident as well. How much do you think that makes a difference, especially to maybe people that are coming in not using local expertise as an interstate investor, understanding those pockets and those different regions that, as you say, maybe have more of an owner-occupier appeal locally that underpins that long-term growth?
Yeah, for sure, Mike. And even, within the local footy club and things like that, I was up there for a past Players' Day on Saturday. So, we get a lot of people within the footy club. And I know one particular pocket of Wendouree where I've purchased, my brother's purchased, my sister's purchased, she's living there. And I could probably name 15 or 20 friends that have all bought within this particular pocket in the last 5 years. So, that in itself sort of shows where people want to live. And, just getting weekly inquiries from first home buyers that are wanting to buy in that particular pocket, and then other areas where they're absolutely not wanting to live around town. So, that in itself, just talking to people within communities and circles, it's quite evident where people want to live. And 32 years of living in Ballarat here, it's you soon work out where the best pockets of the suburb are, and where you definitely want to steer away from.
Yeah, of course. I'm interested also as well when it comes to Ballarat. Obviously, you've mentioned the workplace flexibility. People that maybe are looking to either buy in Melbourne or move to somewhere with a quieter pace, and it's almost like retiring in Bali. You can buy something a little bit better. Outside of that, what do you think is driving the Ballarat market over the next sort of 5 or 10 years? As I understand, it's got a fairly diversified employment sector. There's quite a few professionals there. What are some of the things that you can point to that make you sort of bullish on Ballarat?
The Geared for Growth Property Investing podcast is presented by our business, MCG Quantity Surveyors. If you're an investor or a property professional looking to get the best tax depreciation deductions for yourself or your clients, please get in touch with us at mcgqs.com.au. It's our mission to help as many property investors as we can to maximise their claims and maximise their property education as well.
Well, even what I saw on Saturday here, so the cultural diversity of, different people from all over the world wanting to move here and, asking questions, where's a good school, where's a good coffee shop, where's a good street. So, people are driving up here from Melbourne and, asking the agents, where should we be buying, and all these other things. So it's only growing more and more, each week, that demand with the migration and the affordability of it as opposed to Melbourne's inner ring. And being a genuine city in its own right here, it's I just can't see it slowing down in the better pockets. As I said, there's areas we definitely aren't investing in, particularly some of the outer ring sort of western development zones where there's a huge amount of developable land. Pretty much every house is the same. Sort of huge vacancy rates in some of these pockets as well, where houses are just sitting on the market and not renting. So, some investors think that they're getting a good buying price, but if your house sits vacant for 3 to 6 months, you soon eat away at your rental return. Whereas the suburbs and pockets within suburbs that we're buying in, that's where local people want to be living and renting.
That's very interesting because I saw a post on a property forum and it was, where are you seeing vacancy? Where have you bought an investment property and you're struggling to get a tenant? And I kind of thought, like, looking around the country, looking at the national vacancy rates, I was kind of thinking, gosh, like, it's a good question if there's anywhere. But one of the places that did pop up was Wendouree. I mean, it's hard to think when we've got crisis levels of rental accommodation that anywhere will have places sitting on the market. But of course, as we said before, there's markets within markets. Where are you kind of seeing some of those oversupply worries? And does that come from an influx of investors, or there's just not the demand with the population there?
Yeah, I think it's more so the influx of the investors. So like suburbs such as like Bonshaw, Winter Valley, Sebastopol, all those outer ring development zones where there's I wouldn't say it's an oversupply, but that's where the people don't want to rent that are locals compared to the inner ring suburbs. So, but obviously it is a short term injection of properties because it's such a popular region to be investing in, but because some people are, as I said, not really understanding where the local people actually want to live, and they're just buying whatever makes sense on paper from it looks like it makes sense from a financial point of view, but that's where you just got to be really careful with the suburb selection. And, some of the suburbs that we're buying in or the pockets within suburbs might have less than 5 or 10 properties listed for rent and are being snapped up very quickly.
Yeah. And when you mentioned a few examples of renovators at 400, 500, 700, 900, those sort of price points. I'm wondering, like, if there's a Lachlan O'Connell, like, rubber stamp that this is investment grade property, like, where do you see the opportunities in, let's say, house versus unit, where new versus established or renovated, rather than sort of adding that renovation value yourself, and where is a good price point where you kind of see a window of opportunity for investors where you're not having 20 or 30 groups show up to the open homes?
Yeah, so once you get over that 750 range, that's where it really drops away, and that's where most people I'm finding are more sensitive to rates once you get north of 750, particularly owner occupiers. And it's quite rare for clients to be investing with that sort of budget in Ballarat. So That's where I'm sort of finding most people are tapping out around that 650 to 700. And then once you get above 700, that's where it really dies away with pretty much only home buyers at that level. Mm-hmm. So there still would be a small percentage. I know that there clearly is, because some of the properties you see up for rent would be well in that threshold of price. But the most pressure is in that sub 700 mark for sure. So I can think of an example. It was a beautifully renovated property in Ballarat East. I was there pretty early on in the open. There was 40 groups through while I was there, and then there was probably another 10 lining up to get through afterwards. That was listed the 650 to 675. It sold unconditionally for 700 on that first open. So it was only a small, I think it was on about 350 square metres, small renovated miner's cottage, 3-bedroom, 2-bathroom, sold for 700 unconditionally.
Wow. Yeah. And have you seen a market like that in Ballarat before? I mean, does it feel like it's hotter than, the post-COVID runs that you saw?
It's got a lot of similarities, but what we're seeing this time around, there's a lot more interstate buyers agents and out-of-town buyers agents buying here, whereas back in 2020, there was hardly anywhere near as many. There might have been, say, 5 or 10. Now there'd be well above 50, just speaking to local agents and understanding what's going on that are actively buying here. So, that's from your bigger wholesaler sort of type buyers agents that are, doing 50 deals a month, down to your, solo operators that might be doing 1 or 2 a month. So, and everyone in between. So that's where there's that investor demand's there. And I'm finding this time around with the interest rate rises, like the investors from, say, Sydney or Brisbane that might be on a higher income, if they've got a 600K mortgage that's gone up, even if we get a rate rise totaling 1%, they've got to find an extra 6,000 a year, less their negative gearing benefits. All of a sudden for them, it doesn't look as bad as it would for a owner occupier with $1 million mortgage. And that's where we're seeing a lot more volatility across the market in that higher price bracket.
Yeah, that's an interesting observation, and I'm keen to hear your thoughts on some of the other regions. You mentioned Geelong, which maybe has some parallels in terms of it's a city in its own right, its commutable distance, especially if you're commuting. How do you contrast the difference between those two markets? It doesn't seem from an outside perspective looking in that Geelong has that degree of heat that Ballarat has at the moment in terms of inquiry and competition.
Yeah, for sure. So the way I sort of describe Ballarat and Geelong side by side, it's purely the price point. So what you buy, let's say a $600,000 house in, say, Ballarat North or a Wendouree, that might rent for $450 a week. That equivalent house in, say, a better pocket of Belmont in Geelong or Highton, that house is going to be worth $750,000, $800,000. So, and the rental return might be $500 a week. So that's where because the rental return in Geelong isn't that much better than Ballarat for the equivalent house, but the price disparity is quite significant for a similar house. So Geelong's a fantastic market, and we absolutely invest there for some of our higher end clients that have got the budgets above that sort of 750, 800K mark to get into those better inner ring areas. But the reality is not every investor can get to that level, and the majority of investors are probably averaging around that 550, 600 mark that we're sort of seeing. You might get the odd occasion where they can get up to that 750, 800, and that's when there's various other markets that they can explore. And Geelong is absolutely one of them because where it's positioned, you've obviously got the Surf Coast and the Ballerine, so you've got all those lifestyle factors, only an hour to Melbourne on the train, and it's a great city in its own right as well. So we've seen pockets within Geelong that have done extremely well, those blue chip areas where people that relocate from Melbourne with higher incomes that can commute 1 or 2 days a week, no different to Ballarat. They're happy to pay premiums in those better pockets.
Yeah, I guess the big differential there is the yield, right? If the investors are limited on the budget and requiring that cash flow, then it's a better yield proposition by a fair way in Ballarat, by the sounds of it.
Yeah, for sure.
Before we sort of wrap up, I'll preempt you with a question. I want to throw at you, what do you think people need to know as we head into the back end of 2026 to really try and outperform themselves or get the most out of their property investing? I'm interested with your finger on the pulse when we've had an interest rate rise. We've obviously got the Strait of Hormuz issues with the war in Iran. The RBA is kind of saying that almost equates to an extra 25 basis points. There's a lot more negative sentiment. I've heard from some buyers agents that their inquiry is down. I've heard from some mortgage brokers that they're doing more refinance than they are doing, say, new investor lending. How are you feeling it at the moment? And how does that sort of impact whether you think it's a good or a bad time to buy?
Yeah, I've heard mixed reports, to be honest, and I've sort of found the last 2 to 3 weeks of conversations we've had with potential clients have been quite positive, and almost getting a sense that some people are kicking themselves for not acting when the COVID scare was here. They might have, missed some opportunities and growth there, and now that there's some challenges around the world that's out of most of our control, some people are still moving ahead as they normally do because they see the opportunity there and, don't want to miss out on that next uplift or, that short window where there might be less competition. I think I mentioned to you earlier, still not seeing that with the numbers at the Opens of less competition, but, and then things can change as quick as, that they already have with what's going on overseas. It only takes, 2 or 3 weeks for things to get back to normal and, people to get a much better feel and confidence back into everyone's day-to-day life. It's, largely media-driven and a lot of scare tactics and scaremongering with the way that all the articles are written and all the social media stuff you see. And if you didn't look at your phone for a day or 2 days and just went about your day-to-day and didn't watch the news, you wouldn't even know any different. So that's where we see really good opportunity in the short term. And I think once it does turn and there's a lot more confidence back, I think we're going to get a really good uplift again from those people that might have perhaps sat on the sidelines for 3 to 6 months or however long this challenging period might be. I think we're going to get a really strong little second wing push along in a lot of these markets.
Interesting. And I'm guessing that maybe the answer to that question that I preempted with you is that there's some wins to be had while there's some butts parked on the sidelines.
Yeah, for sure. Yeah, just with that. I suppose those that are confident now that act and able to get into a good asset may not have had that opportunity if they waited it out and wait for everyone else to tell them it's a good time to buy.
Excellent. So for anyone that's listening that maybe is a little bit nervous but have the chutzpah to make decisive decisions to make 2027 be a year where they're in a better financial position than they are now, what is your best advice, Lachlan?
Look, I think if you're in a position with strong buffers, strong serviceability, and you're confident that if a few things do go wrong in your life, that you've got a bit of a 6-month buffer there to get yourself back on your feet and be able to, withstand the worst case scenario for your personal circumstance, I think that's the best time to be able to move forward. Just give yourself that confidence that, okay, if this does go wrong, what does that look like as a worst case scenario for me? And will I be okay if that does eventuate?
I love that. And it's always important to have those defensive positions and those buffers. But once you've got that, fortune favours the brave, doesn't it, mate?
Absolutely.
Awesome. Well, Lachlan, thank you very much for sharing those insights. I know that Ballarat is a market that's still getting a lot of eyeballs, and it's really great to get that on the ground insights from somebody who spent the majority of their life there. So thank you very much for joining me today.
Thanks for having me, Mike.
Cheers.